the best way to understand data availability is this component which does ordering, and there's some sort of consensus on what the ordering has to be. And then of course it provides these more complicated things called like for example, Avail implements this data availability sampling, which allows for easy verification of that. So if I were to sufficiently dumb this down, we can think of this as more like a decentralized ordering sort of a service. And on top of which these rollups can utilize this service like Avail, for example, to do various sorts of execution on top. So these can be EVM rollups. You might have heard of SVM rollups or move rollups, of risk zero rollups, for example, and so on. So now the rollup developers are free to experiment with that because they don't have to deal with all the things like cryptoeconomic security and stuff like that.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show spotlights an infrastructure layer to accelerate the unification of Web3 called Avail. In this episode, we discuss the 3 core products that make up the Avail unification layer: Avail DA, Avail Nexus, and Avail Fusion. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Power up your portfolio by borrowing, lending, and multiplying your favorite assets, made safe and easy by the industry-leading automation tools at SUMMER.FI. SUMMER.FI offers a curated DeFi experience to access the highest quality protocols and strategies. Discover new earn strategies for your portfolio in a user-friendly app designed to filter based on the tokens you hold, the networks you transact on, the protocols you trust, and the highest available yields. Learn more today at SUMMER.FI, the best place to borrow and earn in DeFi. Tired of hopping between tabs, searching for new tokens before the hype catches on? Try MATCHA.XYZ, the DEX aggregator from 0x. Matcha connects hundreds of DEXs so you can trade millions of tokens and find fresh new drops. Matcha works out the best route to save you money on every trade. Swaps are free and Matcha has everything you need to trade on-chain. Gasless swaps, limit orders, and cross-chain, all in one place. Search Trade Done at MATCHA.XYZ. Introducing Flat Money, the first decentralized delta-neutral flatcoin built on Base with sustainable yield that's completely untethered from legacy finance. Because DeFi needs an uncensorable based unit of currency. You can mint unit with RETH, which is held in the protocol's shared liquidity pool, where it's borrowed by leveraged traders. As a leveraged trader, you can deposit your margin collateral and go long on RETH. If you're trading in the perpetual futures market, you'll pay unit holders to open leverage positions. If you're holding unit, you'll earn yield from liquidations, borrow rate, and trading fees. Preserve your purchasing power and offset your exposure to crypto market volatility. Learn more at flat.money. Catch the tide of the mainnet launch of Puffer Finance. Whether you're an Ethereum staker or an aspiring node operator, Puffer delivers the decentralization revolution with its cutting-edge technology. Start with just 2 ETH to unlock the potential of native liquid restaking and maximize your earnings. Join the movement now and anchor your stake at puffer.fi. All right, let's introduce Anurag Arjun, the founder of Avail. Anurag, welcome to the Edge Podcast. How are you doing?
Yeah, I'm doing very fine. And thank you for having me on the call. Looking forward to this discussion.
Yeah, so our goal here today is to explore Avail and to understand what is the Avail unification layer. And so there's 3 main components to that we're going to talk through: Avail DA, Avail Nexus, and Avail Fusion. But let's get started with a little bit more about your background and the genesis story behind Avail. So Anurag, can you share a bit about what else you've worked on, which is a pretty loaded question. There's some very large projects in crypto that you have worked on previously.
So I'll start with some background. So I entered crypto back in 2017. Prior to that, I've spent around 11 years in fintech and regulatory technology, primarily in product and engineering roles. I did a couple of startups before that as well. 2017 was when I entered crypto. I founded Polygon or Matic network, where it was known as back then, along with Sandeep and Jayanti. and worked for about 6 years at Polygon up until last year, of March of last year. So at Polygon, built a lot of the Polygon, what is now known as the Polygon POS stack, the Plasma stack, a lot of the bridging infra, crafted a lot of the ZK strategy that we ended up acquiring firms like Hermes, Zero, Maiden, and so on. But also started Avail within Polygon back in late 2020. And we spun Avail out of Polygon in March 2023, which is last year. And since then, I left all operational roles at Polygon. I have been focusing on Avail full-time since then. And of course, here we are now, almost building Avail from the last 3.5 years and prepping for Mainnet launch for Avail. So that's the background, but happy to get into more details.
Anurag, I'm just curious about that spin out. It's something that I'm not overly familiar with, but yeah, just curious, was that a friendly spin out between Polygon and Avail? Was it contentious? Maybe how did that come to pass? That'd be some interesting color.
Yeah, I mean, there were a couple of points that led to the spin out. First of all, if you remember, if you look back to 2022, 2023 Polygon's history, we ended up actually having these multitude of products within, a single organization. So if you kind of look at Polygon back in 2022, we had POS, Polygon POS, something called SuperNets, Edge, we had Hermes, Zero, Maiden, we had something called Nightfall, Polygon ID, and Avail. Right? So these is too many products that we ended up kind of having under the same umbrella. And of course, Polygon is a big organization, but it's still not possible to handle 9 products at a time, right? You need to the organization should be in a position to kind of give equal justice to all these products. So it was becoming really difficult to kind of handle all these products under one organization. So that's certainly one major point. Second, if you kind of look at Polygon's trajectory and from a product and a branding perspective, so Polygon's brand is now very Ethereum L2 specific. Right? It builds the Polygon ZK EVM, the AG layer, for example, and so it's very Ethereum L2 specific. Whereas Avail is this L1 blockchain, which kind of implements, things like data availability sampling and a bunch of other stuff. And so from a branding perspective, it didn't sit well for these brands to have one common branding. It's just practically difficult to juggle both these two together. So those were some of the factors that led to kind of the spin out, in the sense that we thought that Avail would do much better as a separate organization. And so I would say it certainly not contentious. It was pretty much on good terms. We are on excellent terms with the Polygon org. We actually work very closely with Polygon. But the idea was also that Avail was infrastructure for rollups in general. And so it's not only infrastructure for Polygon rollups, it's also infrastructure for ZK Sync rollups, for Starkware rollups, for Arbitrum rollups, for Optimism, for Scroll, and for all the other rollup stacks that are coming. And so we just thought that, we need to be much more credibly neutral for us to be, providing that infrastructure to avoid any bias, for example. So that, it's a pretty non-controversial answer, but those are the actual facts.
I think that's a perfect segue just to getting into more of the big picture of Avail here. So in all your materials, I see Avail aims to be this unification layer of Web3. Maybe in your words, what does that mean? What is the problem you're solving? And we talked about this a bit before we got on. And I think the way you spoke about it was awesome. So
Yeah, I mean, certainly. So let me kind of try to sum up my thinking there. Right? So as I said, Avail is infrastructure for rollups. But why are rollups so important? Uh, Essentially, like if you kind of look back at blockchain construction history, it began with Bitcoin, but like Ethereum was the first general purpose blockchain. And if you kind of look at the blockchains that came after Ethereum, all these are kind of experiments of how there can be blockchains that are better than Ethereum in some way. Right? Like so, some if you see some blockchains like BSC or other blockchains, those are like that look like Ethereum, have the EVM but have faster blocks, or they have bigger blocks, for example, and so on. And then there are these other blockchains which like think EOS, Solana, for example, and so on, which experiment with different execution machinery, machines, for example, and different ways of doing transactions. But essentially, they're all variants of how blockchains could be. Of course, Ethereum has focused on being the most decentralized blockchain. You can run a full node on a laptop, for example, and so on. So, anyways, basically that is how blockchains construction has evolved. But like in 2019, 2020, what happened is the first rollups came into the picture. Like not a lot of people know. Like when I started out with Polygon, we started building out something called Plasma, which was the precursor to rollups. And so, of course, Plasma never really panned out, and rollups are now universally acknowledged to be the best way to do off-chain scaling solutions. And so, what we really believe is that rollups are going to be the way future blockchains will be constructed. And I'll tell you why. In general, like when you kind of create a new blockchain, L1 blockchain, you have to do a lot of things. You have to, of course, create the execution machine, the virtual machine, for example. You have to do all those things that the developer will use. But you also have to kind of bootstrap this thing called cryptoeconomic security. So you have to bootstrap a set of validators. You have to bootstrap cryptoeconomic security via a new token. You have to ensure the token is valuable. You have to ensure those validators are happy. So it's a lot of effort constructing this new blockchain, and that's why you will see so many blockchains, L1 blockchains that are out there. For example, like you can see a lot of them in the Cosmos ecosystem, for example, but also in other ecosystems which don't have enough cryptographic security. It's very easy to kind of do attacks on those blockchains. So essentially, what I'm trying to come at is rollups kind of solve this problem in the sense that you focus on the execution layer and leave this cryptoeconomic security bootstrapping to a common base layer. And so Ethereum is like this common base layer and rollups don't really need to just borrow security from the base layer, and then they can focus on what they deem important. And Avail really wants to be one of these base layers that will power these rollups on top. Just to complete that thought, right? Like if you kind of look at something like Base did not focus on building out their validator set or bootstrapping cryptographic security, or even in building out their stack, right? Like they just took the OP stack, which is this rollup stack from Optimism, and they rolled out a Coinbase, put out a team that rolled out Base, and they focused on what is more important, like things like user acquisition, adoption, user friendliness, and so on. And that's why they didn't have to spend time on all this other stuff. And that's why what I really believe is rollups are the way future blockchains are going to be constructed, and that thesis is coming right. We are already seeing hundreds of blockchains like rollups being constructed daily, and the cost of spinning up rollups has also gone substantially down. Our cost of spinning up a chain has come substantially down, and what Avail really wants to be is to be the foundation infrastructure that supports these rollups. So that's really what Avail is. But I'll just stop
That's extremely well said. I think when I look at the arc of your career, knowing, what you did with Matic, Polygon, and now through Avail, it makes a lot of sense. If I was talking to another investor, I'd explain like Anurag has lived through the pains of standing up a blockchain when you had to basically build everything from the ground up. And while some of that building has real staying power nowadays as these like legacy blockchains, the reality is that now anyone could really stand up a blockchain because the stack has, each part of that stack has turned into like its own Lego. So it kind of mirrors what we've lived through in DeFi. And to be fair, everything that we talk about with money Legos, it mirrors the legacy software world where, you had to do so much within that stack as an early builder. And then eventually folks saw a need to build those different solutions. And so this is something that really should make sense to folks coming from, like a Silicon Valley, whatever, but, international sort of software background. You started to get into this, and I think this is a good place for us to start to like segue into the three core products that make up Avail. And so maybe you could further dumb down for us what is data availability and like why is this necessary? Through something like an Avail DA, like how does it actually work? So whatever you can do to like really dumb that down for our listeners.
Yeah, that makes sense. So as you rightly put out, right? Like these are the Legoification, if I can call it, right? Like of blockchain. Like any technology goes through this all the time. So I particularly like this example of that someone took at a panel that I was like, which is basically like motorcycle manufacturing of all things. So when the first motorcycle was built, it must have been built from hand, from scratch, and the entire motorcycle must have been assembled in one factory. But as motorcycle manufacturing became more and more mature, now you kind of today, for example, motorcycles are not manufactured at one single space. You have like these different OEMs or manufacturers specialize in different parts of the motorcycle, for example. So you will have a wheel manufacturer, you'll have an engine manufacturer, you'll have like a seat manufacturer, for example, and all of them specialize. And then all of that comes together to make a really efficient motorcycle, which is like performant, cost effective, and so on. And this happens in every industry, certainly in manufacturing, in technology, and so on. And so that's the same happening with blockchains as well. Now, like when we get into that, right? Like what goes into this Legoification of blockchain, right? Like what are these different Lego pieces? So you have this mental picture of this, like the base layer that does a certain set of things, and then you have these roll-ups on top which do things like execution, for example, and so on. So, but broadly, you have these roughly three things like execution, settlement, and data availability. Like these are the three technical attributes that a blockchain, like any blockchain, really has, but does it within one unit. Now, when you kind of break this up into multiple components, you kind of take this into different layers. And so, like the data availability it's actually a poorly worded term. Like it doesn't have much to do. Like most people think it's some sort of data storage, things like that. But the best way to understand it is actually ordering or like sequencing essentially. So data of the base layer, when it says that like there is data available, what it really means is that anything that runs on top of this commits some sort of set of transactions in some order, and the base layer is responsible for ensuring that the order is not reverted, and also of course of verifying the things like the order was committed to, whether it is available, and so on. And so the simplest way to understand this is like blockchains in general, because the blockchain systems are a little different from Web 2 or traditional systems. in the sense that when we send a transaction to a Visa, for example, or a MasterCard or on Amazon, so there is this Amazon server in the backend or the web service in the backend, which kind of takes in all the inputs and then executes them. And the arbiter of which comes first, for example. So, for example, if you're having a flash sale at Amazon, and there are maybe limited products on sale, for example. So, Amazon decides who that product goes to based on some logic. Maybe it's a first come, first serve, or whatever. Like, I'm not getting into details. But essentially, because it's a centralized sort of a system, there is this arbiter, which is mostly the company behind it, like decides the order in which some transactions have to be executed. Now, because we are building in blockchain land and because we don't have these, centralized counterparts, someone has to be handling the order. Like, we might have heard of things like sequencers, and I will not get into the weeds on that. But essentially, someone has to be ordering that, and someone has to be storing the final order data and ensure it doesn't get reverted. Because if the order gets reverted, then it can lead to unintended consequences. So ordering is really the most important part of what a blockchain does. The execution is actually just taking those transactions in order and then executing it to come at the end result. So typically a L1 blockchain does all of this together. When we kind of break this up into different parts, the best way to understand data availability is this component which does ordering and has some sort of consensus on what the ordering has to be. And then, of course, it provides these more complicated things called like for example, Avail implements this data availability sampling, which allows for easy verification of that. So, yeah, if I were to sufficiently dumb this down, we can think of this as more like a decentralized ordering sort of a service. And on top of which these rollups can, utilize this service like Avail, for example, to, do various sorts of execution on top. So these can be EVM rollups. You might have heard of SVM rollups or Move rollups, of Risk Zero rollups, for example, and so on. So there can be so a beautiful side effect of this Legoification or modularization is that suddenly we are not restricted to something like the EVM. Like you can have like any sort of execution machines living on top, and so now the rollup developers are free to experiment with that because they don't have to deal with all the things like cryptographic security and stuff like that, for example. I don't know if I've kind of simplified or dumbed it down, but this will eventually how it look like.
I'm curious, how does Avail DA then integrate with existing blockchain networks? And maybe you can also talk a bit about, if we think about blockchain networks as like the customers of Avail DA, are you more focused on new blockchain networks like rollups that you referred to, or do you go after these like legacy blockchains? Like, is there like a greater addressable market to go after there?
Yeah. So I think so. Maybe maybe I'll answer this in two parts. So one is increasingly, as we will see, a lot of the L1 blockchains, if they cannot afford to have these sort of cryptographic security that the L1 blockchain really requires, most of these L1 blockchains will pivot to being layer 2s, and we are seeing some of this already happening. Of course, I mean, something like a Solana will always be a layer 1, but I'm talking about those other blockchains which that cannot afford the sort of cryptographic security or not able to pay enough to validators, for example, and so on. So certainly, we our customers are those blockchains that want to be rollups, for example. So certainly, certain L1 blockchains will certainly are looking at it and will be looking at it. So that is certainly one segment. The other segment is certainly rollups that that are existing, but also new rollups. Of course, a lot of the newer rollups are the prime target because it's much easier to kind of help them get started with Avail because it's a fresh start. For existing rollups, it's slightly, I mean, it's there is certainly benefit to also using Avail, for example, but it's a much slightly harder lift, for example. And so we anticipate that the initial chains that will onboard on Avail are primarily the newer rollups that come. But these rollups are essentially being pushed by, because all of these rollup stacks have now become a lot commoditized. So you will see that Polygon has a rollup stack called the CDK. Arbitrum has something called the Orbit stack. Optimism has the OP stack. Starkware has the Madara stack. ZK Sync has the ZK stack, for example. And tons of other rollup stacks are under development and certainly will be, like stackified, if I may use that term in a sense. Because, and they certainly don't need to be these EVM style chains. Rollup can be app specific rollup. For example, it can be extremely simple as, like a rollup handling only NFTs, for example, or only doing swaps, for example. It can be as granular as possible. And there are rollup stacks like Sovereign Labs or Stacker Labs, which are attempting precisely this. There is a mental model of L2s or rollups being this big chains, very EVM centric, but that's really that the current state of the rollup or L2 market. That's going to change pretty rapidly over the next 6 to 12 months. To be very fair, L2s are really fancy L1 apps. If you kind of try to look at it from the L1 perspective, the L1 has a view to the L2 in the sense that there's a contract on the L1 that kind of, or some data on the L1 that kind of has some representation of the L2 on the L1. And so if you kind of try to look at it, you can think of this as, just like a more fancy L1 app where most of it is of the execution is processed off chain and then some metadata is sent back to the L1, so on. So really, it's not really a new thing that we are doing. Of course, a lot of new infrastructure is being built, but essentially, these are just, I would refer to L2s mostly as, if we see them as fancy L1 apps, then you can kind of generalize this, saying, okay, this L2 can be as big as entire EVM chain or an SVM chain, but it can also be as simple as just a swap chain that just does swaps, for example, or NFTs, or in some combination of the these two. So hopefully that answers that question.
Yeah, appreciate that. And in that, you mentioned a bunch of different rollups. So I'm curious about what partnerships Avail has already made. Maybe there's some that you can share with us. We're recording this ahead of your mainnet. So yeah, maybe give us a sense of what type of teams you're already working with. Just be super keen to learn about those.
Yeah, so we've been all doing a lot of integrations on testnet as we speak, and we've already integrated with all the major layer 2 Ethereum layer 2 stacks. So for example, Arbitrum, Optimism, ZK Sync, Starkware, Polygon, all of these we've already have integrations ready. And so then there's this bunch of rollups that are using these stacks that are already signing up for Avail once it goes on mainnet, for example. So there's a bunch of early launch partners that have been already agreed to kind of use Avail, for example, and we'll go live pretty soon. But we have also been integrating with other roll-up stacks, for example, with Scroll, with Sovereign Labs, with Stacker Labs, and a bunch of other roll-up stacks that are maybe not that well known, but because they're still in development, but they will be pretty soon. And so any roll-up team that uses one of these stacks can deploy on top of Avail. And so that's what we are looking forward to. So that's really the Avail DA story. But I can kind of get into more detail about the other components of Avail as well.
Before we get back to the show, just a quick thanks to our sponsor at Mantle Network, the layer 2 that pioneered the 5th largest LST with 1.6 billion TVL called MATCH. Since July 1st, Mantle is running a 100-day airdrop campaign called Metamorphosis to distribute a new governance token for the Mantle liquid staking protocol called Cook. The community can earn points for Cook called Powder by holding METH in Metamorphosis and simultaneously enjoying other yield and reward opportunities in the Mantle ecosystem. Users can also earn Powder by staking MNT in the Mantle Rewards Station. For more details, go to the Mantle blog at mantle.xyz/blog and follow the 0xmantle handle on Twitter for more updates.
Yeah, I think just one last question on the Avail DA component, and something like I've been thinking about, would love to hear this from you, is with, the rise of like Celestia, Near DA, Eigen DA, and now Avail DA. I'm curious how you think of this as, like, DA for Ethereum, I think, was a source of revenue and fees. With these much more efficient external providers, is that like a big component of like Ethereum fee revenue that's being taken out of the picture? And curious, like, how you think of this as like adversarial versus helpful, like that spectrum, because I can see it both ways. But curious, like somebody that sits in your seat, how you see this relationship.
Yeah, I mean, I think that's a valid question to ask. In general, like, essentially, Ethereum has been in production since 2014. It has built out this incredible ecosystem in general, and the kind of assets that there are on Ethereum, for example, like it's probably be more than $500 billion at this point, or more in general. And so it's kind of incredible feat that Ethereum has done. And in general, when a project says that it is adversarial to Ethereum in that sense, I mean, it's not that easy to kind of supplant Ethereum and take its place. Like, I mean, there's a lot of practical reasons that won't happen overnight, right? Like it takes a lot of sustained effort in that sense. But we also have to kind of look at what gaps are there in the Ethereum roadmap. And so really the way we look at it is, like, when we actually started building Avail, what we knew that this roll-up centric future was coming. I mean, Ethereum had released the roll-up centric roadmap back in 2019, 2020, and we knew this was going to play out. Now, what we thought was, what is the kind of infrastructure that this roll-up centric future will really require, and what gaps will Ethereum have? Because Ethereum is a really valuable network, secures more than $500 billion in value, and it's not really trivial to kind of upgrade it overnight. So it requires, so it necessarily has a long update cycle. And so we thought, what would be the opportunities that would come of it, and what will roll-ups really require to be supported. And that's why we started building Avail DA. And Avail DA is essentially very close to what Ethereum wants to do on its Danksharding roadmap. So what Ethereum wants to do on its future data availability roadmap, which is called Danksharding, is this thing called data availability sampling with validated proofs. And Avail, at Avail DA is really, like we have taken those primitives and, went and built that. but there is tremendous network effects to what Ethereum does essentially. And what Ethereum is at this point in time is it has an incredible base layer, it has incredible assets and high economic security. But what it really also, because it has gone on this rollup centric roadmap, it also has the issue of fragmentation, UX fragmentation. Because I mean, if you are going to live in this world of 1,000 rollups and more, users are going to have a hard time navigating this reality of a, like switching through multiple RPCs, bridging from one chain to the other, for example. And so certainly when we look at Avail DA and Avail in general, so Avail DA certainly it's an attractive proposition for rollup teams that want to have inexpensive DA. And so, so that's why a lot of our early integrations are rollups or L2 solutions that settle on Ethereum but have their DA on Avail, for example. And so you will see more and more of these constructions going forward where they use both Avail and Ethereum. And so, but the reality is that you will have these hundreds and thousands of chains and you will have this fragmentation. And what we implement on top of Avail DA is something called Nexus. This component, it basically is this intermediate layer between the rollup and Ethereum that kind of manages interoperability or message passing between these rollups. And so right now there is no infrastructure on Ethereum. Of course, you can do this via Ethereum smart contract, but it's just too expensive to coordinate to that. And so what we really build is in this complementary component to which kind of enables these rollups to talk to each other and eventually appear as one single entity for the user in general. We do this using things like proof aggregation and data availability sampling and so on. But coming back to answering your question, what we practically see is that certainly we have, we kind of help rollup teams have inexpensive DA, but that's not really the only point, right? You have to go over and beyond. To be very honest, along with Avail, there's a bunch of other teams working on things like alternative DA, but that is just a start of the problem. You also have to kind of look at this overall infrastructure. You have to look at how UX is going to play out, for example, and that's why we don't focus on just the data availability element. To be very fair, our implementation is one of the best ones in the market. I'm biased, but Avail DA's implementation is the only one in a solution which implements data availability sampling with validity proof. Actually, no other DA solution does this. This helps, but this helps us. Our novel implementation of data availability sampling helps us to build something like Nexus. Without Avail DA, without the way in which we have approached the implementation, something like Avail Nexus, which kind of connects rollups to each other. So you think of a Polygon CDK chain talking to a ZK Sync chain, to a Starkware chain, to an Arbitrum chain, to an Optimism chain. If you kind of look at all these different rollup stacks, you might have heard of things like Optimism planning a super chain, Arbitrum doing in this Orbit initiative, Polygon doing its AG layer, ZK Sync having its own sync layer, Madara having or Starkware having its own interoperability. And so the thing is, the L2 strategy for Ethereum actually is a very smart strategic move, because it allows the private market to kind of compete and build solutions for Ethereum. Because each of them have their own incentive structure, each own incentives to kind of build out these solutions, and that's why we have this diverse set of solutions on the Ethereum L2 stack. So Arbitrum has has a different implementation, and all Optimism has one. So all of these are different, and then it's like going back to that example of cathedral and the bazaar, right? Like, and so Ethereum has taken that more bazaar style way of working, but the reality is that because we have this whole diverse set of ecosystems, now you need someone to sit in between and stitch them together, and to really build that, right? Like, I mean, you can certainly build bridges, like let's say something like a multi-sig bridge like Wormhole, for example, or something like. All of this can be used, but what is the absolute best that can be used to make all of these together, right? Like, what can we do for a more unified sort of Ethereum? And so that's really some of our ambitions for Avail, to kind of provide that infra in general.
Anurag, you did a good breakdown of Nexus there. I'm curious, when would Nexus be coming to market? Like, I don't know where you are in development of it. I believe Avail DA is kind of like that first product that will be coming to market on Mainnet. But yeah, what about Nexus?
Nexus is something we have been actively working on. I think on the testnet, we are anticipating end of Q3, we should have like the initial version of Nexus on testnet, I would say. We are currently working to connect the Polygon ZK EVM ecosystem with the ZK Sync ecosystem. That's what we are focused on, the first version. And of course, progressively we'll add more. I think production should be end of this year or early next year, roughly, for Nexus.
So, Anurag, we've covered Avail DA, we've covered Avail Nexus. Let's cover the third component here with Avail Fusion. Can you just walk us through, like, what's the vision behind it? What kind of problems does it solve for? And then we can get into the weeds a bit in terms of how it might work.
So, Avail Fusion is essentially our component that kind of helps in increasing our the Avail L1's cryptographic security, in the sense that typically if you when you are constructing a new L1, you are bootstrapping it with the native token. So we, of course, when Avail DA goes to Mainnet, it will be backed by the Avail native token. And like typically for any new blockchain, what happens is you have this initial period where you have the token having some value and then slowly it increases over the years. Typically, that bootstrap problem is always there. What we just wanted to do was, because we are going to be infrastructure for powering a huge number of rollups, we wanted our base layer to be extremely secure. And so with Fusion, what we are really, it's not a separate layer, it's just a component within our staking module, which allows people to stake assets other than Avail. So think like ETH, BTC, all of those can be used to add be used in the staking layer of Avail. And so, it just helps us to have more and more value staked, essentially. And the beauty of this construction is that any rollup that sits on top of Avail inherits this entire shared security. So it's essentially, we use Fusion to kind of increase the cryptographic security, and rollups really just need to use the Avail DA for it to inherit the security. It's slightly different. It's a different model from something like, let's say, an eigenlayer, for example, or a symbiotic. It's essentially more like, how can we make this L1 more have more cryptographic security? But the mechanics are slightly similar. I would, if you want to slot it, I would say something like an eigenlayer is more like a supply side component, where they supply a lot of this cryptographic security to consumers, which are AVSs and other. In our case, what we've built is a more native component, which is more of a consumer. Like we kind of absorb that demand and make it usable by rollups on top.
I think users would be curious when they can get involved. Like, when would staking of assets start? If Fusion isn't live for till maybe Q1 of 2025, but when can users get involved?
Yeah. So actual Fusion, certainly production timeline is early 2025, but we've been thinking of kind of getting a head start on deposits, for example. So we've been thinking actively on starting deposits for Fusion in Q3 or early Q4 sometime. That's what we've been thinking. Like before Fusion actually goes live, we might start an early deposit campaign or so, and that's when users could get involved. That's roughly what we've been thinking.
Teller is a decentralized protocol that enables anyone to borrow or lend using any Ethereum asset. You can think of a Teller loan as a DeFi cash advance, one where you can use any of your favorite ERC20 tokens as collateral to get an instant USDC loan. Discover the power of a DeFi cash advance today at teller.org.
At Moonbeam, we're building a world where the wonders of decentralized technology are accessible to everyone. We're advancing Web3 integration through product enhancements, funding for innovation, and investment in our partner ecosystem. Our product roadmap includes ZK initiatives, tokenomics updates, and 8x throughput. Our $10 million innovation fund invests in startups that deliver cutting-edge solutions for RWAs and Web3 gaming, and our partner ecosystem continues to grow through grants and incentives. Moonbeams is delivering frictionless user and builder experiences to create the future of the internet on-chain. Join us by participating in the Moonrise campaign today.
As far as like an Avail token, I don't know what you can share with us, but I think it'd be interesting to know how you're thinking about using the token within the ecosystem, if you can share.
Yeah. So as we said, right, we've been thinking about this problem for quite a lot of time. And so we've designed the token to be used across the Avail ecosystem in general. So of course, it gets used as a free token on the Avail DA layer. It uses a staking token on the Avail DA layer for sure. But because we build these additional components of Nexus and Fusion on top, what Nexus does is builds this interoperability between rollups on top. And essentially, there is this whole bridging component that comes along with it. So you have a lot of participants, things like relays, for example, that run nodes for Nexus, for example, and so on. And you can have rollup sequencers and stuff like that. So there's a bunch of participants that can that play a role in how Nexus functions. And we kind of share the revenue from bridging, from sequencing, for example, and so on, from these rollups with Avail stickers, for example, and so on. So essentially, like, to kind of zoom out a bit, we really thought hard of where the value accrual of a conventional smart contract L1 blockchain is, and then how does it apply to this more modular sort of a construction. And so certainly we like most other DA focused blockchains, we certainly have used this in fees and staking. But we also try to, have this token play a active role in the value accrual across the vertical stack. So it's not only at the base DA layer, it's also on more the execution side, which is basically like the sequencing with the bridging or the interoperability bits, for example, and so on. So it plays a role across the Avail ecosystem in general.
And something else I've been thinking of, I don't like the position that some of these founders are in to launch tokens into these communities. It almost feels like threading the needle sometimes, just like you can almost sense like the pitchforks are already ready to come out. And we're seeing like, I don't even know what you have to do to make some of these communities happy sometimes. It just seems like a near impossible task. So I'm curious, as a founder, pre-TGE, maybe ready to go through this gauntlet almost, like, how are you thinking about things like token allocations and airdrops and all this stuff? Because it truly does seem like, I don't know, like an execution nightmare to pull this off and make all parties happy. But yeah, just curious how you're thinking of that piece of the puzzle.
Well, absolutely. I mean, things have changed a lot since like we did the MATCHA allocation way back. I mean, it's 4 years is like a lifetime in 5 years is a lifetime in crypto, right? Like, so those days were, of course, pretty like were simpler. Nowadays, like things have become a lot harder. There are much more people in the space, much more activity in general. But there's also this thing that because of all the ways in which like retail can come to the market, like it's very difficult to do retail sales, for example, and so most projects don't do. We also haven't done that, but essentially it also ends up that like projects end up allocating 40%, 50% to investors early on, for example. And so we've been very circumspect on that. Like we have tried to keep early investor allocation on the lower side, so that like it's not entirely unjust to people who come later, for example, after a TG, for example, and so on. So as much as can, right? Like you cannot, like it's very difficult to go back to the days. Like I remember we did our Matic launchpad on Binance in 2019 at a $25 million valuation. We raised 5 million by selling around 19% of tokens. We were an unknown quantity at that point in time, but it's really difficult today to do that because there's so many projects at that kind of valuation, and so it's hard for anyone, like even investor, professional investors, but also in general the community to choose a good project because there's so many of these projects now, and how do you kind of sift the real from the not so real? So it's a complex thing, right? Like, and so you have to have now different sort of measures, for example. And so I think professional investors certainly play a big role in vetting some of these projects, for example, in general. And airdrops, for example, are one of the ways to kind of build out this community. But this also now becoming very hard because like our airdrop farming is a thing, and so there is certainly a lot of civil activity. So how do you kind of filter legit activity? Like I'm actually, like we as Avail, I am from a Avail founder perspective, actually I'm slightly happier relative to other projects because we didn't have like a long airdrop sort of a window in that sense. Like, and so because projects that I see have a long airdrop window or anticipation of airdrop, they have sustained farming, which leads to unrealistic expectations that you can see from the previous few projects that have launched airdrops. There's been massive expectations, and of course, like no airdrop can handle the too high expectations. So especially with things like the points meta, for example, and so on. Like I thought the previous iteration, like things like liquidity mining in DeFi, those were simpler because people knew what was in store for them. Like if you had like a DeFi liquidity campaign, you knew that if you went in early, you had this much APY. The more the funds will get to a lower API. So it was like tempered in that sense. Like the points thing is a very open sort of a program where, like it's very difficult to set expectations into like what will be the actual conversion from points to tokens, for example, and so on, right? Like, so it's very hard to be a project in that stage. So we did something for our, of course, we had a small, we had a community that helped us through the testnet. For example, we had a few tasks during our incentivized testnet, for example, and so on. But really, our community is much larger because we are really kind of catering to roll-ups from each ecosystem. And so our community is a future community is really the summation of all these communities together. And so that's why, we decided to reward active users on all of these major rollups, including Polygon ZKVM, Arbitrum 1, OP Mainnet, StarkNet, ZK Sync Era, for example, and so on. And so we try to do things a little differently. Of course, it's very hard to, satisfy everyone. But we not only us, all other projects are also trying to no one wants to make their community mad, right? Like, where it's just becoming more tough.
Yeah, bunch of great points there. I think the best airdrop is the one that you never expected. Like, those turn out really well because you had users that were caught off guard, which I think the best airdrop of all time was probably the Uniswap airdrop, just because there were so many users, even though it was a very small group compared to now, that just had never anticipated a token. And so it was such a delightful surprise. And there was so many stories of just average users who had done very few trades, finding out that they had, earned some really outsized sort of airdrop, like a very large airdrop for very little effort. I think another thing you mentioned there too that I would run with is I think it makes sense to run programs over shorter periods of time. The one that comes to mind that I think reinforces this is when Athena was in like this sort of alpha beta stage. It was gated, so you had to be whitelisted to contribute any sort of liquidity. And eventually, when they opened the gates and made that announcement, anyone that participated knew they only had like a few months. And to be clear, I actually thought that was a bad idea at the time. I was thinking that's such a short window, but now in retrospect, based on what you were sharing too, I've looked at it as like, I think this has been a part of their success. They were able to like work with less data over a very short amount of time. And we're really excited ourselves to see Avail then go to mainnet. And I think based on what you shared, I'm expecting that you will thread the needle better than some of the other teams we've seen this year. And as I say that also, full disclosure, Nomadic and I are investors in Avail, very proud to back the team. So anyways, guys, this is a great place for us to, I think, wrap up the conversation. So first off, just Anurag, thank you so much for joining us. I want to remind our listeners that they can learn more by going to availproject.org. They should follow Avail Project on Twitter. They should follow Anurag Arjun, which is just his first and last name. That's his Twitter handle. And we'll put that all into our show notes so you can easily reference it. And then maybe you can close us out with, can you remind us when again will Avail DA hopefully be live on mainnet? Like maybe what is there like a deadline we can expect it to be live by? And then any other milestones that we should be paying close attention to over the rest of the 2024 for the next like 6 months or so.
So Avail Mainnet certainly should be launched in a few weeks. I don't know when this episode is going to be broadcast, but like in a few weeks, certainly. Other important timelines are, we will certainly be opening up Fusion deposits in sometime in Q3. And I'm also very looking forward to the first prototype of Nexus between, like a relay between ZKVM and ZK Sync. That should be live in early Q4. So those are some of the things I'm really looking forward to this year.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.